He aims to play a pivotal role in enhancing the Maharlika Investment Corporation strategies and through it contribute to Philippine economic growth and prosperity. Previously Executive Director of the Office of the Presidential Advisor for Investment and Economic Affairs, he is a C-level executive with at least 30 years experience, including in global corporate governance. With us now in Thought Leaders, please welcome newly appointed President and CEO of the Maharlika Investment Corporation, Rafael Joel Consing Jr. Joel, so good to see you here and congratulations on your appointment as employee number 1.
Indeed. Thank you very much for inviting me.
So you actually applied for the job.
Yes, I did.
So the question is, why? with so much political firestorm, if you will, coming around Maharlika Investment Fund itself, why take on the job?
Well, a number of things. I felt that the country's been pretty good to the family. It's been good to me, so I thought it was time to give back. And I also think that having seen the issues that plagued the Philippines, being in OPEA for close to about a year now, I felt that I would have I gained the insights that I need to be able to run this fund properly.
Tell us more about those insights, because it's interesting. You hadn't even completed a year, and
Yes.
yet you felt the courage to actually apply for the job
Yes.
of the most politicized corporation. You had been in the Office of the Presidential Advisor for Investment and Economic Affairs as Executive Director.
Yes.
What exactly did you learn from there that you could actually help the Maharlika Investment Fund with?
So OPEA is really about dealing with investors. So
Foreign and local.
foreign and local, correct, but largely foreign direct investors. And in those in the last 11 years, we basically dealt with the different pain points that foreign direct investors have raised in order for them to start investing in the Philippines. So hence, having seen what those are, those provided some impetus in basically what I think we can do out of Maharlika to be able to improve the environment in order to be able to actually bring them in.
So what can we do, and where do we start?
So for example, one of those that they pointed out would be the cost of utilities. And I think it's a major issue, particularly for manufacturing companies, and that therefore forms one of the pillars of Maharlika. Particularly, one of the reasons why electricity's costs are very high is because we need significantly more plants, we need significantly more capacity, and also the interest of foreign investors for the renewable mix to take a bigger form, to have a bigger contribution to the total the production capacity in the Philippines. That's also where we can add value. So hence, the energy security strategy or pillar of Maharlika involves building renewable plants and coming up with a holistic, I would say, solution to these issues.
So why do you think you got the job at the MIC?
Well, quite a number of things, because of my experience, A, and B, also because, in my opinion, because of my understanding of what the issues are in the Philippines. And I think that being able to put the pillars in place will really solve many of these issues.
It's interesting, you hadn't completed a year and yet you already know what you'd wanted to do in something as controversial as the Maharlika Investment Corporation. You've spent, as you say, exactly 34 years in the private sector.
Correct.
Could you give us a comparison of like the similarities and differences of working in the private sector as well as government in less than a year that you have been in government after your retirement?
Sure. Very different animal, very different animal. Obviously, being in the private sector, it's a much more efficient way of working things out. Now, in government, as an observer, because see, in OPEA, I was still partly private sector, so we had a hybrid format, really, because whilst I was working in government, I was really still part of the private sector in a sense that I was working for Secretary Frederick Go, rather than the government itself. So therefore, it allowed me to basically observe how government was operating, and having these pillars, for example, allows me to then take certain of these processes out of the government bureaucracy into Maharlika and be able to execute them much faster, in my opinion. So I think that's one value that being in Maharlika would bring to the country to make it more efficient.
So wouldn't you, I mean, if a criticism comes and they say that it's like building a bureaucracy within a bureaucracy, what would you tell them?
Not really. Like for example, the first hires that we will be doing would probably be just about 15 people. And by
that would be your management team?
No, that would be the whole company. And by the end of the year, we'll probably be about 30. So no, we're not actually building a bureaucracy. In fact, we're building something very efficient. So in the funds management side, for example, instead of creating our own funds management team and building or recreating a whole new governance framework in respect of funds management, entered into an agreement with the Bureau of Treasury, of course subject to board approval, for them to manage our funds. So it does two things. It removes perhaps all fear that an event, something like one MDB could occur. And second is it really allows us to keep our costs down because we don't have to hire a funds management team to run the funds.
Speaking of the board, 5 out of 9 will be appointed by the president.
That's correct.
So that's majority.
That's correct.
How do you then address concerns that there might be a hand in there that shouldn't be there because it is, as you call it, a sovereign wealth fund?
Sure, no, that is a great question. So all of them applied for the role. And you're absolutely right, the president will be appointing them. The same way that the president appoints Supreme Court judges, and yet we have to leave it with the wisdom of these Supreme Court judges to remain neutral in order for them to be able to dispense justice. These same people have a very high level of integrity, I presume, and significantly coming from the private sector, they would also have their own level of intelligence that I think they'll be bringing to the table. So I think the combination of that would at least, I think, keep it neutral, in my opinion. And also being 5 out of the 9, really they've got a majority of the board. So therefore, they will be the driving force behind Maharlika in terms of the direction, in terms of the vision, and I will be shepherding it along the way.
But there will be an investment committee. So the investment committee makes recommendations to the board, and which will also influence the way you decide on which assets to invest in.
That's right. So let me give you an idea of what the governance will be. So within the IRR, it basically requires us to put up an audit committee, an investment committee, and a risk management committee, which I think is quite basic. But beyond that, we're actually bringing in a corporate governance committee and also a remuneration and a nomination committee. So now that's in terms of what the board will do. In terms of the management, we will have our own investment management team who would make recommendations to the type of investments that we'll be undertaking, of course, within the context of the pillars that I've talked about, subject to board approval. So one of the things that we will be writing will be an investment framework, right? So hence, all investments will be judged according to that framework. And really, that would be the process by which we'll be following.
So how are the CVs looking? Because I know that they've been coming thick and fast in your LinkedIn and in your emails. What's the quality of the applications looking?
Quite impressive.
All locals or foreign? What's the mix?
There are a few Filipinos that are applying from abroad, and we'll consider all CVs definitely. But I'm quite impressed. I think Maharlika has been attracting very strong talent, and I believe that when we finally have the team, something that the country will be very proud of.
So what are you looking for when it comes to the chief investment officer, your deputy?
Depth of experience, that's first and foremost. The ability not just to be able to look at numbers and analyze them, but to have the insights, to be able to look at it long term in order for them to be able to judge what might be good for the country or not, and be able to present this with me to the board and convince the board as to whether it's yay or nay and why it should be yay. And hopefully the board will then buy that
Do you have a
bodies like this.
specific mix as to how many are supposed to be locals and foreign? Presuming that you will be hiring international fund managers as well.
No. They will. There are three things. Now, when we put together the team, we'll be hiring them on the basis of the three I's. So integrity, intelligence, and initiative, in that order. I've said that quite a number of times. I'm neutral when it comes to color. I am neutral when it comes to nationality, frankly. Number two, we will be putting in, like what I said earlier, we will be instilling rigor so that every investment process every investment goes through a process so that regardless of type of company, big or small, public or private, in any sector, you go through the same rigor. And third is transparency. So therefore, every investment that we'll make will be reported in an annual report posted on our website. So we take accountability basically very seriously. We will put it in simple terms so that everyone can understand. I think that's what transparency will really be all about. And most importantly, an ESG-focused investment. So those are the four keywords around which we'll be building the team and managing it. So professional, world-class and professional, transparent, ESG-focused, and rigorous.
So do you think you can operationalize by the end of the year as the president's mandated?
That's going to be tough because it's already early part of December. We're hiring. We still don't have the board. This afternoon and all weekend, I'll be writing the job descriptions, which I'll be presenting to the BSP HR, who's basically helping us because we have no HR. I remain to be the only employee in the company, so I've sought assistance from the other agencies to help me put this together.
What support did you ask from the president in order to enable you to operationalize by the end of the year?
Well, didn't really seek any support from the president because in terms of operationalizing it's really up to me. So what I sought support from, basically from other agencies, would be people. So hence, like what I said, went to the BSP for their HR, for at least helping me put together the team in terms of compensation levels. Now to basically seek their assistance or seek the assistance of the other shareholders in terms of at least putting some, I would say, the warm bodies at the very least to start helping me start looking at investments or helping me build the investment framework. And so that by the time the board is constituted, then at least we've got something to propose. Yeah, so it's going to be a tough 1 to 2 months, actually.
It will, and it had to be the Christmas season.
That's fine.
Let me pick up on what you said about transparency, accountability, really important values we're going to try to look for when the corporation is up and running. You were part of the technical working group that revised the implementing rules, which also included the relaxing of the qualification requirements.
Yeah.
So how do you address concerns about this potential conflict of interest between the transparency in the process and also accountability?
Well, they're two very different things. In terms of the transparency, well, everyone knows that I was part of that group, the technical working group that reviewed it, right? The rules, for example, you had lawyers there. They basically gave in their opinions about it. I gave my opinion largely when it comes to the capital structure.
Did you give an opinion about the qualification requirements?
No, because I felt it was conflicted. I would, if that had come from me, then I think others would have raised that point. In my case, I had two particular comments. One was in respect of capital structure. The other one was also in respect of the structure of the or the audit committee. See, if you look at the original draft of the audit committee, they had included 2 senior executives, and that is actually conflicted because the role of the audit committee is supposed to be oversight of the financial statements, of the way financial records are being kept, being reported. So if you've got two senior executives sitting there, then they might be misconstrued as favoring management. So my recommendation was to remove that, right? And then that's exactly what they did. And similarly, when it comes to the risk management committee, having those actually written all there is against, well, not against, but inconsistent with the principles that was written up in or approved in Santiago, Chile, which is the Santiago Principles that they refer to. And it basically recommends for the board to be writing all these. That's exactly what we're doing. So let the board write that risk management policies or risk management framework in order, and that has to be consistent with what the company is all about. So we will then therefore rely upon the board to write them.
In other countries, the president and CEO is appointed by the board. So there are critics who say that there seems to be some sort of a deviation from normal practice. So how would you address those concerns?
I think those are, I don't think there's any hard and fast rule in terms of how these are going to be, how these are managed. Also, but you're absolutely right. If you look at corporates, it's typically the board who would go through this through a process of hiring, but it's the prerogative of the president to. That's how the law's written. So hence, that's how it's been executed.
In what instances do you think you would need the approval of the president when it comes to investment choices in the fund?
That would be the board to decide basically as to what the investments that we should be entering. That's exactly why when I talk about these pillars, for example, it is through it. I always predicate it by saying that the board still needs to approve it, not the president. So the president doesn't have to approve any of these. It's basically the board who will be approving all these investments.
So how much latitude then do you have as the president and chief executive officer who is answerable to the board?
Only to the extent that the board allows me to. So that's the latitude that I have.
Now let's get semantics out of the way before we discuss further what your plans are, which is a bit of a paradigm shift. Is Maharlika really a sovereign wealth fund in its truest sense? Because in my conversations with economists like Winnie Monsod and economic managers such as Bobby De Ocampo, Jose Quisha, they insist that a sovereign wealth fund exists only if there is excess money. We don't have excess money in the Philippines.
Sure.
So how do you address that specific concern about the lack of excess money?
Sure. So when you talk about sovereign wealth fund, I think and you're absolutely right, that's been a big source of misunderstanding, in a sense that when the framers were writing the law and they were talking about a sovereign wealth fund, it was really from the perspective of sources of the fund, right, which is looking at the entire balance sheet of the nation. So looking at the banks and the other assets of the nation is sovereign wealth. Okay? Except that when you speak to the person across the table, when they talk about sovereign wealth fund, they look at the definition from the perspective, or they look at it immediately that it's predicated upon there being an excess of or financial assets or a surplus. The midpoint is it's a national development fund, which is a form of a sovereign wealth fund. So if you look at the continuum or the evolution that I see, this sovereign wealth fund will be going through. It's going to start as a national development fund. Wherein for the first 5 years, perhaps, all the investments will be domestically driven, long-term in point of view, and a collaborative in nature in order for you to be able to achieve its highest impact and wider in scope. Then it can become strategic, where you can basically choose strategic sectors of the economy. And eventually, once you're able to generate surplus from these, then it'll now start acting like a sovereign wealth fund that people are much more accustomed to.
The main concern people have is really the impact it may have and will have on the budget deficit. As you know, our budget deficit for 2023 narrowed, but not to the extent that we'd want it to be, because when you compare that to the international deficit levels, we're still twice above the 3% level. We're at 6%.
Yeah.
So the main concern is And what they want to know is if there will be an impact to the country's budget deficit for whatever you're going to do with the Maharlika investment funds.
I think that the seed funding that we will be receiving was about 125 billion. 50,
from the land bank?
50 billion coming
Bank.
from land bank, 25 billion coming from the DBP, and the rest will be coming from the national government, coming from the dividends that they would have received coming from the BSP, sale of the asset privatization trust, and also a portion of the dividends that they'll be receiving from PAGCOR. Those specific ones are the ones that has got a direct impact on the deficit. Right? It's basically,
So it will widen the deficit for in the immediate.
well, not necessarily. See, when you look at the deficit, it's really about borrowing and spending. Right? So in this case, it's not being spent; it's being invested. Right? So they're basically using those borrowed funds effectively, because the reality is that we are in a budget deficit, whether or not those dividends come in. And you are investing, you're basically funding capital with borrowed funds. So it's only impacted only to that extent. Beyond that, we intend to raise capital from the market. So which means that we will be raising this from foreign investors. So that should not impact the deficit, basically. So I would only say that my response to that is it is only going to be a limited impact, only to the extent of its capital contribution.
So what are you going to use the money for to invest and make sure that the investment does produce the dividends that you will soon, or maybe in due course, give back to the stakeholders, or maybe even to the national government?
Again, a national development fund has got a twin bottom line objective. So a sovereign wealth fund typically just looks at the commercial return. That's the type of sovereign wealth funds that everyone is accustomed to looking at, i.e. the Norwegian Pension Fund or perhaps the GIC. In this case, it's got a double bottom line objective, i.e. Commercial returns and similarly socio-economic impact. And that's how I was referring to it's collaborative in nature. In a sense that, for example, when we start investing in what I call the agroforestry industrial urbanism, wherein you are basically laying out the groundwork for farming within the context of building mega ecozones around it, or should I say, building a megazone and creating perimeter agricultural and reforestry undertakings around it. You still need basically the NGOs to help the farmers to be able to increase their yields, and also particularly, in respect of when we roll out the digital infrastructure, wherein when you start building these telecoms towers, for example, in the rural areas, that's meant to benefit the farmers. But for them to benefit from it, the NGOs need to be involved in order to be able to upskill them, to be able to teach them, making use of digital information to be able to increase their yield and productivity. If they want to engage in precision farming, for example, they're not going to learn it just because there's digital information. They need to be trained. That's why it's collaborative in nature. Right? So, point being that the objective of this is just not just commercial returns, albeit it's extremely important, but it's also being able to meet the socio-economic development goals of the government that's written in the IRR. When we talk about socio-economic goals, i.e., if when you look at what Maharlika Investment Corporation is all about, it is the corporation that was created by law in order to manage the fund. Okay, but it's got really three objectives: poverty alleviation, helping sustain the high economic growth, and third is to ensure that there's going to be sustainable development. And so hence, part of that is creating job opportunities for everyone. Going back to my point earlier about this agroforestry industrial urbanism, that includes building, or that basically involves building mega ecozones, wherein we can then bring in locators, foreign direct investors who will be creating all of these factories. Those will be generating jobs. around which you'll be building farmlands for agriculture, and putting together the farmers and the processing and all the elements of that ecosystem, and then alongside which you've got restorative forestry. And within that ecosystem, we'd like to build townships so that people will actually live where they work. So you put it all together in clusters. And what are the benefits? A, you basically lay the framework for foreign direct investments to come into farming and also into the manufacturing side of it. And that therefore generates jobs, it boosts earnings, it provides a potential for technology transfer. When you talk about restorative forestry, you basically improve your climate, you improve the air that you breathe, and you also are able to generate carbon credits, which you can sell overseas and generate more capital for you to reinvest. And the townships that we were thinking of, or well, I'm thinking of at least, which subject to board approval, is because it's going to be government land. Instead of selling land to workers in the urban areas today, it's very difficult for workers to buy properties or buy houses. And if they can, they'd end up with very small homes, or they'd have to travel quite far from where they work. Here, what we'd like to be able to do is to enter into long-term leases with them, so that whatever monies, funds that they have that they've been able to save, or monies they can gain access to by way of borrowing, they can use to build a better home. So we'd like to give them better quality of life, and I would say dignity, better dignity in terms of where they live and how they live. So put this all together, I think that would meet the socio-economic developments of the economy.
So this double bottom line model that you have just expressed, I mean, are we able to pattern that after any other sovereign wealth funds in Southeast Asia? What would be the best example?
In terms of the socio-economic development objectives, I'm not aware. Okay, I'm not aware. Apart from being able to generate jobs, that's one of the objectives of INA. That's the Indonesian Sovereign Wealth Fund. Now, in my opinion, the INA is probably a proper comparable in a sense that it has got both socioeconomic development in a sense of two things. No? One, it is sovereign wealth fund, but everything is being invested onshore. So it is a national development fund in that case. But in terms of that particular idea of agroforestry, industrial urbanism, particularly, that's my concept. Which we're basically, hopefully, we can roll out. So I can't think of any particular comparable for that idea.
So you've been busy writing the governance, as you said, and the frameworks, etc., as you're trying to look for the folks who will manage your team or make up your team at the corporation. What are you keeping in mind then as you draft what you call yourself a paradigm shift, knowing that you're facing enduring criticism bordering on conflicts of interest, transparency, and independence, or the lack thereof?
That's because I disagree with them. Okay, the way we're writing it is basically to ensure that all those that you've basically mentioned, that will be able to satisfy the market once it's up there, that they will see that we are going to be transparent, we are not conflicted. If the conflict is from the perspective of crowding out private sector, no, we will co-invest with them. In terms of transparency, like what I said, we will be disclosing all these. It's part of the operating principles that I talked about earlier. So I would say that just give it a bit more time and they'll see what we're doing.
On the point of collaboration, there is criticism that, in fact, it could overlap certain responsibilities, perhaps, with maybe NEDA, the National Economic Development Authority, or maybe the Board of Investments, because you are dealing with priority infrastructure projects that are already within their own ecosystems. So how can you ensure that there will not be any overlaps as you intend for this very collaborative sort of approach to managing
In my
funds?
opinion, there's really no, in fact, there is no overlap. NEDA and BOI are policy-making bodies. BOI is an investment promotion agency. NEDA is an economic development agency. So hence, it's very different. We're not creating policy. Maharlika is basically investing and we're executing. In fact, in looking for infrastructure investments or potentials for it, I look at the 197 projects that the NEDA had approved as potential sources of deal flow. Well, except for those which are already ongoing. They have got quite a number of PPP projects. We've got a few ideas that we'd like to be able to pursue in respect of this PPP. For example, one idea might be when certain of these difficult PPP projects are being offered, perhaps you can provide staple capital in order for the investor to, in order to entice them to come in and be more aggressive because they know that X% of the investment is already being provided for by government through Maharlika. The other one might be if you look at PPP projects, they typically are quite slow in execution. That's a common complaint. And what we can do is we can actually move it out of that process and be a co-grantor of that project with the agency. So we can partner up with the agency and we can execute it together outside of the PPP, the traditional PPP process.
So if more and more public works projects go through the Maharlika instead, what do you think is going to be the impact on the national government's budget process?
No, in fact, it won't go through Maharlika per se in terms of Maharlika funding the entire thing. But rather what I meant was it'll be providing capital, a staple capital, wherein a portion of it will be able to participate in order that we can generate the same returns as private sector would. So hence, if there's a reason for why private sector love these, because they're profitable. So hence, it's an opportunity for government to be able to take part in that profitability. So once we get and generate enough returns, we will be paying out dividends, and those dividends accrue back to their shareholders, of which government is a majority of.
And those projects really have to have an impact on nation building, because that's what you want, social economic development, but also your exposure to the private sector lends criticism to the fact that it might have an influence in the way you choose the projects because of your affiliation with publicly listed companies over the last 34 years. How can you assure the critics that you would decide in the best interest of the country rather than your private sector connections?
Sure. No. So Maharlika itself will not be choosing these quote-unquote partners directly, but rather they'll be pitching for it. They'll be so when we provide capital, staple capital, for example, it just means that whoever wins that project will be there. So it guarantees a place for Maharlika to have in that potential, I would say, cash flows in the future. But in terms of who actually wins the project, they'll have to all bid for it. So it's still going to go through the same tender process. The only difference is it guarantees us a seat in the table.
You mentioned crowding out earlier, and I wanted to put it into context because there are concerns that the Maharlika may crowd out the more immediate concerns when it comes to social investments and programs such as in health or education. Infrastructure is good, yes, but what about those immediate needs when it comes to health as well as education? What do we do
So
with
when
that?
you talk about crowd out, you're basically saying that you are in fact taking on a majority of that, and therefore private sector cannot participate. That's what crowd out refers to. So what you're basically asking is, will Maharlika actually participate in these projects? That's not crowding out. In fact, in my first presentation to the advisory committee, composed of NEDA, DBM, and the Bureau of the Treasury, I pointed out to Secretary Balisacan that out of the 197 projects that are there, not one refers to education. And yet, when you speak to Department of Education, they do have projects that they'd like to pursue on a PPP basis. So we'll look at that. That's not crowding out. In fact, that's enabling these projects to happen. So the other projects that we'll be looking at, not necessarily pillars, because when I talk about pillars, I look at it really as a substantial portion of the equity or the capital being invested in these. When I look at the other, I would say investments that fall under the category of others, part of that would be public health, part of that would be education, like what I said, and that's not crowding out. In fact, it's enabling. And also, staple capital, providing staple capital is not crowding out. It's an enabler.
So down the road, let's say the fund makes money, because that's
It will make
essentially
money.
one of, it's the first bottom line that you mentioned.
Yes.
What are the mechanisms in the law that would allow stakeholders and even the national government to withdraw money, maybe to invest in social projects and programs?
You don't have to have that in the law. It's basically part of corporate governance. So once you generated certain level of retained earnings, you pay out dividends to your shareholders. So that's how it's exactly going to be done. Because it's seed capital that they put in. When you put in seed capital in a company, you don't pull it out, basically. You wait for dividends to accrue, and that's exactly how we're going to do it. So also, I think what's also important is, one other important question is, how are we going to be bringing in foreign direct investors into the fund? So I think, and when I've looked at that, and again, I'm going to be proposing this to the board. So there are three ways. So when you're looking for, if investors wish to participate at the level of MIC itself, at this point in time, the most that they can participate in is through hybrid capital, because common shares will remain under government. That will be 100% owned until we decide to go on an IPO, at which point in time, we will have other shareholders apart from government. That's A. B, if they want to participate in the projects through Maharlika, what I would like to propose is the creation of sub-funds. So I've mentioned these pillars. We can create a Maharlika Fund for energy, Maharlika Fund for agriculture, for agroforestry, industrial urbanism, and so on and so forth. And these unitized funds, investors can participate in. And I'd like to be able to structure it really wherein both institutional investors and individual investors can participate. So like the way banks would set up UITFs, we will do the same thing. But this time, instead of investing in fixed income or the stock market, it'll go into sectoral investments. Okay? So that's a second way of participating. The third way is, if any of these large institutional investors or operating companies would like to invest directly in these specific projects, then they can enter into joint ventures with us, or they can co-invest with us. So those are the three ways by which they can participate, both foreign and local, and even retail investors at some point in time. It's going to be sectoral, strategic, and tactical.
So it's going to be a long slog before we make those returns happen. I mean, what sort of a timeline are you looking at? You've got 3 years as mandated in the implementing rules.
Again, like what I said, it's a national development fund. And therefore, you've got long-term in point of view, domestic in focus, wider in scope, and collaborative in nature. So let's not think that immediately they'll be generating returns out of this. Now, within those pillars, there are going to be low-hanging fruits that we'll be looking at. I think in the energy sector, there are quite a number of low-hanging fruits that we can participate in terms of PPPs. And key is to be able to generate some level of cash flow. But in terms of the home run, that has to be long-term. The only reason, for example, that the combination of Temasek, MAS, and GIC are able to contribute up to 19.87% to Singapore's budget is because they've been doing it for a long time. They've compounded it. Now they can start contributing that much. The only reason why the likes of the Norwegian pension fund, for example, is able to contribute close to 26% of the nation's budget is because they've been able to generate these over a period of time. They've already compounded these returns, and now they can begin contributing. Right? So, for example, in 2022, the Norwegian pension fund, if I'm not mistaken, was going to be contributing about 410 billion kronas into their national budget. We can't expect that of Maharlika at this point in time because we're in investing stage. These other sovereign wealth funds have been invested over the past 30, 40 years. They've compounded these returns. Now they can begin contributing significantly. And that'll there will come a point in time wherein Maharlika will be able to do that, but not within the next 3 to 5 years.
So we're looking at least six and up for the first returns, the first fruits of the low-hanging fruits that you mentioned.
I think that certain of them would be able to generate returns immediately, but it will not be the same level as how much these funds that I've mentioned earlier can contribute to the budget.
Okay, so when's the second roadshow? I mean, following on from the first roadshow and you've received some kind of feedback, when are you going to mount the second roadshow?
So, aiming first for a presentation at Davos, okay, in mid-January, and following which I intend to go probably to the Middle East sometime in late January or February, and hopefully following that, we'll be able to go to the different countries to pitch this. So first, we need to put the team in place. Even before we learn how to run, we first must learn how to walk. So we'll put that in place first. We'll put the framework, put the management team in place, and only then would start getting external investments coming in. Again, once you have got these capital in the balance sheet, you'll be responsible for it. Right? So we need to make sure that our governance frameworks are in place before we invite other investors to come in.
All right. Before we wrap, just quick answers for quick questions here.
Sure.
What's your assessment of the government's administration of the economy in the last 1.5 years?
Challenged in a sense that they were coming in with a global market that was not so, I would say, conducive. You've got these world wars that are occurring. So it's very challenging environment to navigate. That said, the bureaucracy is working very hard to ensure that despite these challenges, that they're able to deliver their services or their commitments. But there are quite a number of factors that are beyond their control. And I think everyone needs to understand that.
The economic prospects for 2024, how is it looking from your end?
I would say better than 2023. Because now that the 2023 has been challenging, but I could basically observe that many of these agencies are putting in place policies in order for them to be able to, bear fruit moving forward. And I think 2024 would be the first year where they will begin to bear fruit.
And what will Maharlika mean to the ordinary Filipino?
I would say jobs. I would say a change in the not immediate, but rather an evolving change in the agricultural landscape. And I would say those two are the two most important things: food security and job opportunities.
I wish you all the best for 2024. Thank you so much. And congratulations on the job, Joel. And catch us again next Tuesday at 9 p.m. Philippine Standard Time on One News. You can also check out the long conversation on YouTube, Spotify, Apple Podcasts, and Google Podcasts. I'm Kathy Yang, and this is Thought Leaders.